welcome to Build to Scale e-commerce show by Atkins Agency. And going globally definitely has its own benefits, like reducing dependence on one market and ability to scale a business way higher and further. And definitely can skyrocket your business growth and revenue. However, it comes with additional responsibilities that are usually not so easy to navigate, like legal responsibilities and taxes. So today we'll be interviewing Alex Wyatt, a global manager of SimplyVAT, a company which is on mission to help e-commerce businesses reach global markets by making VAT compliance simple. And without further ado, let's dive into the topic of how to expand your e-commerce business internationally while making sure you are compliant with all these local taxes nuances. So, hey, Alex, really happy to have you here.
Hey, yeah, thank you so much for having me on the podcast today.
Yeah. So let's hop into the first question just to hop into immediate value. And so for most growth-oriented e-commerce businesses, the ultimate goal in the end is, to take their product from one market and expand it across the world, And let's talk about some of the critical areas to consider when going from one country into another. And maybe you could talk about, about what taxes apply for international sellers.
Yeah, absolutely. So there's obviously your corporation taxes that you have to think about wherever you are actually incorporated as a company. So that's not the taxes that we're going to be covering today. It is more talking about the indirect taxes, which are, well, here in the EU, we are covering VAT, which stands for value added tax. So this tax is added at every step of the supply chain, and that's why it's favored by governments in over 140 countries, also known as GST in some countries. So looking just at Europe, VAT is added from the raw resources all the way to the manufacturer onto the supplier onto the end customer. And for VAT registered businesses, it's not meant to be a burden to you because you can always offset your VAT on your VAT returns. So it's always going to be reclaimable, any expenses or import VAT that you have. But yeah, so looking at this VAT, over here in Europe, you need to make sure that you are adding it into the prices that you list on any website that you have. So it's really important to make sure that you know exactly where you're selling from, what the VAT rates are, so that you're not eating into any margins that you have, any profit margins.
Okay, so it's like very different, essentially tax compared to, a US, etc. And, if let's say US business or somebody else are looking to expand somewhere else, maybe there's like international friendly expansion country, where let's say it would be go to like first selection, so you wouldn't have to complicate things with taxes first.
If I would say if you are a U.S. business and you're looking to expand into Europe first, then I would say enter into the UK. There's no language barrier. It is quite straightforward in terms of getting your goods into the UK. Now there will be kind of little bits of little bumps and hurdles along the way coming up with BREXIT happening on December 31st of this year. The end of the transition period will happen, but I think ultimately the UK is, I would say, the second largest market in Europe at the moment, next to Germany. And so there's a huge opportunity here, and the language definitely helps. You can start entering in, testing the market, and then kind of adapt as you start expanding across Europe as a whole.
Yeah, and taxes wise, you have to do basically the same tax anyway, right?
Yeah, from taxes, what you will be doing, you'll be paying your corporation taxes as normal back in the US. But once, it depends, I guess, really where your products are coming from when we're looking at charging VAT. So if you're importing your products into a warehouse or a fulfillment center in the UK, that triggers an automatic obligation to be VAT registered. So you're going to want to look to get VAT registered before you start importing your products in order to reclaim any of your import VAT. So that would be, I guess, step number one. If you're looking to expand over, look into getting your VAT registration, whichever fulfillment center or country your fulfillment center will be in.
Okay, and there's like a thing called distance selling, and importing. So basically, right now we're talking about importing the goods, right? But there's also opportunity to sell it from US warehouses and just ship it here into Europe, right? So maybe you could talk a bit more about pros and cons of both of these solutions.
Yeah, absolutely. So we'll start with importing, and when we talk about importing, we mean importing directly to the end customer. So you're shipping your goods from outside of the EU, say from the US, from your fulfillment centers there, and shipping directly to customers in the EU. So currently there is what's called the low-value consignment relief threshold. This threshold is set at 22 euros in and across Europe, or 15 pounds in the UK. So if your products are being sold at the point of sale with a value of less than that 22 euros or the 15 pounds, then you would be able to import your goods into the EU to the final customer without any extra import VAT or duties being paid on that. So they can just go straight through customs. If you're,
Okay,
oh yeah.
yeah, continue.
I was going to say, if your
Yeah.
products are over that amount, then you would then have to be looking to see who is going to be the importer of record. So is it going to be you as the seller, or is it going to be your customer? And essentially the importer of record is someone who is accounting for the import VAT and duties at the point of customs. So when your goods are going in through customs. If it's going to be the end customer, they will be, met either with a letter from customs or from, the freight forwarding agency saying you need to pay X amount in order to get your goods through the customs border. So this can be quite a bad buying experience for a customer, because it might be extra delays for their items coming through. There could be extra charges that they weren't aware of, that now that they need to pay, they thought they were getting one thing at checkout, and now they're paying an extra 20%, for example, for their goods to come through customs. So you could, as a seller, be experiencing returns coming back to you because people might not want to be paying these extra fees, or even getting negative reviews for this. So I would say that could be a downfall by making the customer the importer of record. Now, on the flip side, if you, the seller, want to be the importer of record, you can do that, and that would mean that you would be paying the import VAT and duties at the point when it goes through customs. But we would say that you'd need to be VAT registered in those countries where you're importing into. What that means is that you can then reclaim your import VAT on your VAT return, but you also need to be charging the local rate of VAT on your at the point of sale. This can start to add up for businesses, because if you have customers all across Europe and you want to be the importer of record, using DDP, deliver duty paid, for all of those customers, you now are taking on a large cost of compliance. So
Yeah.
this is where we get into distance selling. um, and I really love the distance selling rules. This is my bit of a tax nerd kind of where I come in. But what it is, the distance selling rules are where you're importing your goods into a fulfillment center within the EU. And once they're in the EU, you can sell cross-border to private individuals by only charging the local rate of VAT where your sales are coming from. So where the country of departure of your goods. So you're going to import your goods into a fulfillment center, let's say in Germany. You're going to VAT register in Germany because now your stock is a taxable supply in that country. And then what you're going to do is you're going to start selling cross-border. You can send your goods all the way to customers in France, Netherlands, Austria, wherever across the EU, up until these set distance selling thresholds. So the thresholds are typically around 35,000 euros, or the local currency equivalent. But in Germany, Netherlands, and Luxembourg, it's 100,000 pounds. And up until Brexit, you can sell cross-border to the UK up to 70,000 pounds before having to VAT register. So if you're just starting to test the markets over here in Europe, I think that these rules are a great way to see where your customers are, to to kind of capitalize and even from, I guess, looking at an advertising perspective, you can kind of see where the best place to kind of advance into and expand into going forward using these tax rules with a lower cost of compliance. Then once you cross over these thresholds, you will then need to VAT register in the inbound country, and at which point you will then be charging local VAT to where your end customers are, and no longer being charging the VAT at the sale departure country. So there's no double taxation. You're only being charged tax once, but yeah, hopefully that kind of explains the
Yeah,
difference to
basically
distance selling.
complexity increases, right? The more countries you have. And is actually, you mentioned like very good point, and this is what a lot of our clients are doing. And what I'm talking with smart e-commerce owners, we are just getting one fulfillment center set up somewhere in Europe, usually Germany. I know some people who set up in Madrid, right? And we're just shipping everything from there. And this is kind of like their central location. And we are using these kind of like, thresholds to basically, capitalize on them. And then, when we're growing, we are then registering, for that into each of the separate countries. So tell me, from your own experience, are there like any type of products that are more maybe complex to sell and adapt to this type of value-added tax?
I guess in terms of VAT, I wouldn't say complex to sell in regards to VAT. I think as from a compliance perspective across Europe, you would have different obligations if you're selling, say, skincare or medical devices or electronics that you would have to comply to make sure that it meets, say, the European standards. So I would say from that point of view, you'd need to make sure that you are really preparing your products, getting the local certificates if that's necessary. But I guess from a VAT point of view, there are different products that you can kind of benefit by selling because there's reduced rates or zero rated VAT that you can charge. So say here in the UK, there are zero rated items such as safety gear, or baby clothes, or baby products that you can sell to customers with 0% VAT. And that includes going cross-border up until those set thresholds are met. So that's a great way to start capitalizing or making at least a little bit more margin on your products if you are, playing to kind of which products have a reduced VAT rate out of the countries that operate with those reduced rates. But you need to be very careful once you start selling high value or high volume cross-border and you're crossing over those thresholds. If you're selling baby products here in the UK, charging 0% VAT, but now you trip over the threshold in Germany. Germany doesn't have a reduced rate for baby products. So now you need to start incorporating 19% into your fees and your prices. So just take that into account when you are setting your fees or choosing your products that you sell. But there definitely are ways that you can kind of optimize depending on what products you sell and where you sell them from.
Okay. And, like getting back into like this value-added tax system, for maybe US, Australia, and, foreign sellers to understand it a bit better, what is the difference, between European system and US system? You mentioned, that it's basically taxed in different stages of, let's say, product creation cycle or something. And we were basically values added.
Exactly. Yeah. So, and I would say the main difference between even the US and Canada, for example, the sales tax in North America is charged at checkout. So you'll see a price listed on a website, and then all of a sudden, when you're going through the checkout, there's an extra X% that's being charged to you that you haven't accounted for. Over here in Europe, we don't charge or everything you see listed on a website, it's all inclusive of all your taxes. And maybe they get away with it because our taxes are quite high over here. So they include it all in the prices. So we don't see, as consumers, we don't see what the what the actual taxes that we're paying are, because they're already included in the price listed. So as you go through checkout, there's nothing else to be added. What you see is what you're paying right at the point of sale. So as you go through, you can kind of budget in that respect. So I would say that's like the main difference between North America taxes and European taxes. And the big thing for sellers to do as soon as you're adapting from that change is making sure you're accounting for the VAT in the prices you set. They are larger VAT rates. They range from 17% to 27%. So you need to make sure that the fluctuation in VAT, the fluctuation in VAT rates can be added into your product prices, and you can still make a profit off of them.
Yeah, and how does like value-added tax refund works?
So for refunds, you can refund as long as you can refund VAT as long as you're VAT registered in a specific country and you have invoices. These invoices will need to have the seller's VAT number on them and your VAT number on them. So you can't reclaim if you don't have your VAT number, a valid VAT number on the VAT invoice. There will be depending on the country that you're trying to reclaim from, it will list the actual VAT rate, how much you've charged. This will be included on your VAT return, and it's typically kind of deducted from the amount that you owe to the tax authorities or the amount that you've collected from your customers. It's deducted from that, so it will be more like of an offset rather than a reclaim. For example, if you're collecting a load of VAT at the point of sale, typically your reclaims are going to be less than what you're collecting. So it would just be offset that amount. So you're only paying a slightly less amount
Yeah.
to the government.
Is there like any good way for, let's say, e-commerce retailer coming from US to predict, what we will be actually paying as a value-added tax? Because, we are seeing, hey, it's 17, 21%, right? But in reality, usually it's lower because you're able to reclaim some part of it. Is there like any ways to predict this?
I would say it is quite predictable because, so say you're importing your goods into a specific country, you know exactly how much import VAT that you're going to pay. So if you're importing into, let's say, France, for example, you're going to be paying 20% import VAT, and that's based on your cost value of your items plus any freight and insurance on that as well. So you'll be paying that. That money is essentially yours. So you'll be reclaiming that or offsetting it. So as long as you keep that aside in your bank accounts, you will be, that's going to be still yours at the end of the day. So I guess kind of that would be the main, in terms of cash flow, that's going to be impacted because you won't be able, you have to pay that money up front to the tax authorities as it's going through customs. But then you will always be able to kind of keep that money. So really, as a seller coming from outside or, importing goods from outside the EU, I think the best way to look at it is that money is still technically yours. It's just kind of interrupting your cash flow more than anything. You will be able to reclaim that. Again, it's not supposed to be a burden to VAT registered businesses. So if you're VAT registered, you can always reclaim.
Okay, good. And I know like in 2021, there's going to be a bit of an overhaul with value-added tax system, and basically all these low consignment reliefs, will be abolished, right? So maybe you could expand about what is going to be, and essentially how it's going to change, maybe affect the economy.
Yeah, absolutely. So there's a complete and utter total, like you said, EU VAT reform happening, looking directly at e-commerce businesses and how they're operating, especially through marketplaces, or if you're selling on even on your own website. So it's actually going to be starting off with the UK as the UK leaves the European Union on December 31st of 2020. So what will happen is what they're making the marketplaces liable to collect VAT at point of sale for non-local sellers. So if you're not including UK businesses, anyone else, marketplaces are going to be collecting VAT. If your goods are already in the UK, they're going to be collecting it at point of sale. and then paying that over to the tax authorities. So your obligations, if you're selling on a marketplace, if you're importing goods into a fulfillment center to be fulfilled from the UK warehouses, you then just need to have a VAT registration in order to reclaim your import VAT, but you're not actually going to be collecting the taxes at the point of sale. The marketplace will be. If you're selling on your own website, you then need to make sure that you are charging all of the taxes at the point of sale. There's no threshold to exceed. You always need to be collecting that. There's no changes there. If you're importing goods directly to private customers, then you will be if you're importing goods directly to private customers in the UK post-Brexit, you will be charging VAT on all of those goods. There's no low-value consignment relief threshold any longer after Brexit. So what that means is goods with a consignment value of less than £135, you will be charging VAT on all these goods at the point of sale. You will not be charging it at customs. It's going to be charged at the point of sale. So this is a big thing if you're running your own website. If you're shipping goods from the USA directly to UK customers, you now need a VAT registration right away because you now need to be incorporating VAT at the point of sale. There's no threshold. If the consignment value breaches over £135, then what that means is that goods can go through under normal customs procedures. And that just means you're choosing who the importer of record is. Is it going to be you as the seller, or is it going to be the customer? If you, the seller, are going to be the importer of record, again, you already have your VAT registration in place. So, you would then be paying the import taxes, reclaiming that on your VAT return, and still charging VAT at the point of sale. If the customer, oh yeah, go ahead.
Yeah, no, go, continue.
I was just going to say, if the
Yeah.
customer is the importer of record, they're going to be paying those import duties and taxes when their goods are coming into the UK.
Okay, so I just basically wanted to recap everything, as a simple person, because once again, I'm not in finances, etc., and I believe a lot of our audience is not in finances. Sometimes it might be hard to understand, but essentially what it means, that, hey, at certain point, right now, you will need, to be basically VAT registered in every country you want to sell to, right?
Yeah. If you're depending on, well, there's a lot of different kind of variables that can come into play. But if we're looking at the UK specifically, you will need a VAT registration coming in.
Okay. Yeah.
Now, go ahead.
Yeah, and if you're, let's say, going from UK into other countries, and shipping from UK to other countries, do you need to still have like a local VAT registrations besides UK?
At the moment, no. At the moment, you can use the distance selling rules to sell cross-border. After December 31st,
Exactly.
everything will be seen as an export from the UK and an import into the EU. So it's like the UK has now become similar to shipping from the US. And you would then be importing everything, choosing who the importer of record is. Everything would then have to go through customs procedures going across border. So there is going to be a huge barrier. So if you are thinking to come over into Europe and start selling in Europe, I've been suggesting to people, look at two different supply chains. Look at importing into the UK directly to service the UK customers. It's the second largest market. It's a big market. You wouldn't want to miss out on it, but you do need to kind of factor in the additional kind of logistics around it. Then be looking into importing into an EU-based country, and then you can use the distance selling thresholds to sell cross-border. So there is, a little bit of extra leg room there, but you would then have, access to the rest of the European Union with that.
Yeah, exactly. And essentially, the core difference right now that you have to have basically VAT registration in two different places instead of one, because in the past you were able to ship everything from one place, right? But yeah, now you need UK one and one from European countries. So I believe majority of people will be choosing Germany just because it's in the center. Some people like actually Poland for that, from what I talked, because you usually are able to get a little bit cheaper rates for fulfillment and 3PL management. But yeah, it's case to case dependent. There's also like very interesting topic about, COVID-19, right? because certainly, transforming, I believe, this whole market and economy and, e-commerce business in a way, but in a way, I would say it actually positively impacted a lot of e-commerce businesses. But are there like any, tax relief, subsidies or something, to boost economy for that, maybe e-commerce retailer could leverage?
Yeah, so in terms of tax reliefs, there hasn't necessarily been released for non-local businesses. However, there are payment deferments that you can look to capitalize on if you are currently VAT registered in some of those countries. I would speak to your tax agent or us if you need assistance with that. Otherwise, there have been certain stimulus packages that have come out from specific EU countries where they have lowered the VAT rates temporarily to help, kind of kickstart the economies again. So looking at Germany, for example, at the beginning of July, Germany lowered its VAT rate from 19% down to 16% standard rated for any retailers, anybody operating in Germany with a VAT number to start selling with a lower rate of VAT. And this will last through to December 31st of this year. So it's a big thing to note that it's only temporary, but as a business, you could, be saving extra money on that. So it's quite useful. The same thing kind of happened in Ireland. It's going to be starting in September. They have lowered their VAT rates from 23% to 21%, and that's starting from September going until the end of February. So as we kind of see the kind of economic impact that COVID-19 actually brought to a lot of these different countries, I'm sure other countries may even be extending these reduced rates. More countries might bring it out. Here in the UK, they used a different program more for the hospitality industry that they lowered the VAT rates, but unfortunately not for the e-commerce market. So there's not anything that you as a business can capitalize on at this moment. But yeah, if you do need to help with any sort of COVID-19 VAT related stuff, you can check out our blog. We've on SimplyVAT.com, because we have written loads of content on the different deferments that are available or different payment plans that you can use as a business.
Yeah. And I believe, certainly a lot of people, will have additional questions, etc. Maybe you could, advertise yourself a little bit more, where people could find you, maybe contact you about certain questions, or maybe even look for your services.
Yeah, absolutely. So as you very well know from now, we specialize in VAT for e-commerce businesses looking at Europe and Canada. So if you have any questions, or if you're looking to start into those markets, or even if you have already started, we can help do any VAT registrations, ongoing compliance for your business. And the best way to find us would be either going to simplyvat.com and contacting us through there, or if you want to reach out to me directly, you can email me at alex.wyatt@simplyvat.com, or you can find me on LinkedIn and just send me a nice little message.
Certainly, and I believe there will be people interested in that because it's a super complex topic, and as a business owner, you never want to do these things yourself and even try to figure it out yourself, right? There are people with way more experience than you at that. Let's leave it to them, right? And let's focus on business growth. This is kind of like my thinking, and my business partner is thinking of, as part of finance management, overlooking. I know, it might not be the best solution, but essentially this is how we divide it ourselves. And I'm more on marketing side, performance side. He is taking care of a back end of a business. So Alex, it was super nice to having you here and just talking with you. I think certainly there was a lot of value and even a few things that I learned myself.
I'm glad to hear. Yeah. And I mean, I kind of just grazed the surface of VAT. So yeah, if you do have more questions, feel free to reach out about your specific scenarios, because you never know, there might be a better way to operate.
Exactly.